Welcome back. This is Open Exchange coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're getting into pre-open now. Before that, let's get in Manoj Muralidharan, VP Derivatives at Religare Broking, who joins us. Hi, Manoj. Morning. Tell us, what is your strategy for the day?
Good morning, Nigel. I believe that this contract of Jan has started at least on a muted note, if you see in terms of positioning both into your Nifty and Bank Nifty in terms of open interest. But then the FI long positioning of 57%, like you mentioned just now, it has come down to 38%. But today being expiry, we look into certain more intricate data from the option side. The max pain, at least as of now, with yesterday's closing, is around 18,070. So we believe the expiry might be closer to 18,070 to maybe an 18,100. The intraday range might be an 18,220 and maybe some support on the 18,000 side. So we believe that if you see the last 5 to 7 sessions, the intraday quantum of long or short does not get carried into the next day. So the story is all till that time we have the market on. So, the sentiment does not really get carried to the next day. So we believe today might be a different day. We might have a range bound session with 18,100 closer to expiry. A prudent strategy here would be closer to 18,180 on futures. If you get, you can go and buy a put option for a good 100 points at the downside. And the flip side, if you get a dip of 18,020, which might be possible, it becomes prudent to go long with the call option for an intraday 80 to 100 points on Nifty.
Individual stocks then, Manoj?
We believe that we can do a good put ratio spread on TCS. The stock is somewhere close to 33.10. So a better strategy is you buy a 3,300 strike call or put option, for this month and 25th Jan. You get it for 65 and you sell 2 times a 3,200 put option at 32. So that becomes zero cost. And obviously there is a margin, I guess, close to 1 odd lakh on that. So we expect the target of around 40 rupees on that. So the view that we have is we believe that TCS might correct somewhere close to a 32.40 to 32.60, where the strategy can come in. Now, the second buy, the other buy that we have would be on Tata Steel. We believe that 112 to 114 is a very good weighted average price where the stock can be bought. The stop loss should be, let's say, 109, and we're expecting close to 119 on the stock as well.
Okay. Thank you very much, Manoj Muralidharan, and have a fabulous 2023, you and your family. Thank you for joining us today. Okay, so that's the futures and options strategy for the morning. And now let's put on the table what our team has found out in terms of what's momentum run. In our Momentumizers segment, we have precision camshafts. Sonal Butra is here to detail that. Tell us, Sonal.
Good morning, Lata. Well, yes, this stock is on my radar because the volumes have picked up massively this week itself. And if we just look at the moves for the stock, yesterday it was up 4% and this week itself it has seen gains of 21%. So in the last 3 days, that's the kind of move this particular stock has seen. So I was looking at the volumes on the NSE and they have picked up sharply. From levels of around 25,000 to 51,000 on a daily basis, that's the average. In last 2 days, it has hovered between that 13.5 to 16.5 lakhs. That's for this particular stock on the NSE, and turnover as well. From 25 lakhs that we saw on 29 December to around 52 lakhs on 30th December. Yesterday, the turnover was around 16.5 crore rupees, and before that, it was 18.5 crore. Yesterday, also the stock crossed that 200-day moving average of 115 rupees per share. Though after this big move as well, the stock is still down 37% from its 52-week high. So yes, there was a massive underperformance that we saw last year for this stock, but some of it is gaining, is recouping those gains as well, and there is a lot of momentum that we are seeing in precision camshafts.
Okay, thanks a lot for that, Sonal. Very helpful there. But let's move on. Crude prices saw a big 5% slump overnight on worries of a global economic slowdown and rising COVID cases in China. In the last 2 sessions alone, crude prices have slipped 10%. To discuss the outlook amidst the shaky global setup, David Lennox, analyst at Fat Profits, joins us now. David, good morning and Happy New Year to you. Hope the year has begun on a good note for you. It hasn't for the crude bulls. What are your thoughts? Do you see further pressure?
Oh, good morning and Happy New Year to you all as well. Look, yes, one would certainly suggest that the crude markets are reacting quite savagely to the prospects of a global recession, and also, as you've suggested, what's happening inside China. Yes, we've seen the Chinese authorities move to soften their COVID policies, but unfortunately the impact on the broader populace is yet to be felt. And while we still see continuous disruptions in the real population, that's going to continue to cause concern for the broader oil prices and, for that matter, the commodities. However, if you start to have a look slightly longer term, at least we now have seen that policy shift. So we only need to see the Chinese authorities start to improve the way in which they're handling the pandemic inside their populations. And that will very quickly get the market swinging back to a more, we believe, positive trend to the upside. So overall, we think that the oil price, yes, we are seeing that weakness. And yes, we are seeing perhaps weakness in the global, broader global economy. But when you start to look to the other side of both of these events, we do think with the lack of investment that we're seeing inside the industry, it does make for a very good oil price probably towards the end of 2023.
Okay. David, good morning and Happy New Year from my end as well. If you can tell us, I mean, how bad does it get, this pressure, the near-term pressure on crude? Do we see 60s?
No, look, we think at this stage we probably won't see it visit the $60 level. It may drift into the 60 to 70 region, but we don't think it'll stay there very long because we're well aware that OPEC was quite supportive of trying to get the oil price to do something not too long ago, and that succeeded for a little while. So OPEC will, we believe, stand in there and perhaps start to cut production if they do see that price heading anywhere towards that with a 6-0 in front of it. So look, overall, with OPEC possibly standing in there and looking to cut production if we see it falling further, with the prospects that, yes, the shift in the policy inside China has occurred. They just need to get their population now more broadly accepting of how to deal with the pandemic, and also the fact that we are seeing perhaps an underinvestment in the industry. As I say, it's going to be to the top side that we'd be looking for the oil price towards the latter part of this year. Look for volatility in the near term, yes, but we think the trend is going to be higher as we head towards 24.
That's not exactly music to our ears. Our country is a huge importer. But, you know, can you time this? When do you expect this lack of investment in fossil fuels to catch up? Can the uptrend start as early as after the lunar holidays are over in China? Or will it be, you know, much later, maybe second quarter of this year?
I certainly would probably be towards the middle of the year. It's not going to be an instant thing, and it's something that we've been well aware of for some time, that there's been a lack of investment across the energy sector in obviously carbon-based energy sources. So from that point of view, we're well aware of it. But from time to time, markets lose sight of that. And obviously at the moment, with the other factors that are imposed on the oil price, they've lost sight of that, but it will come back into focus. But it will probably take a further 3 or 4 months. We really do need to see the Chinese population become more organised with the way in which they are dealing with COVID. The policy shift has been made. So we would be looking towards certainly the middle of this year for that oil price to start trending higher.
Okay, if you can just leave us with a range for this quarter itself. You said it's not impossible that it dips below 70 for a smidge, but what's the range?
Look, at this stage, we haven't got a 6 in front of our price. We think it'll stay probably between 70 and 80. And then for the rest of the year, we probably think it will head back towards $90 to $100.
Okay, 90 to 100, not looking pleasing. Thank you very much. David Lennox, it was a pleasure having you with us. Have a fabulous 2023.
You too.
Okay. Well, let's get back to our guest. Nischal Maheshwari has been with us and very patiently. Thank you very much, Nischal, for your patience. You know, one stock that's actually done well every day of the new year has been HDFC Life. So your thoughts on both this specific stock, it underperformed last year, and the group in general?
So I think the group in general, I think there is nothing which really, is there any worry about that group? No, not at all, basically. And I think HDFC per se, basically, because there was a transition, merging of the two bigger pair stocks. I think that's why the group as a whole underperformed in the last year. And otherwise, also insurance also had a challenge last year because of the COVID. So there was a lot of claims which came through, both on the general as well as on the life. So I think that was a fallout of it. And I think given that COVID is behind us, life insurance companies have started doing well. So I think HDFC Life is the right up front there, one of the top stocks. So definitely it is a buy.
Okay, it's a buy. In the FMCG space, what are your thoughts? Marico came out with what looked like a subdued quarter, right? I mean, there is weakness in the rural areas. The consolidated revenue growth is in low single digits. Would you be cautious on the sector as a whole, or do you like some stocks here?
So we have been positive on within the FMCG, we have been positive on the food sector. So Britannia continues to remain our top pick, and ITC, these are the two stocks basically, and both of them have been positive for us for the reason that the food portfolio has been doing pretty well for them. So yes, and there are challenges as far as I think the personal care and other products of the FMCG are concerned, especially because of the rural side. And we still do not see strong demand coming back from the rural. So we prefer the food sector, Britannia and ITC.
Got it. Okay, all right. Thanks a lot for that, Nishal. Britannia and ITC, both the stocks top of the list. I'm wishing you a good day ahead. Well, it's almost 9:10, so let's get Sudarshan back as well as Mitesh. Sudarshan, what's your 9:10 call?
Well, for the Nifty and Bank Nifty, follow intraday charts to trade on the trend. And REC is a buy with a stop under 119.
Sudarshan, please don't go away, because I have the same question to you that I had for Nishal. HDFC Life, is it technically showing an uptick? It's done well every day of this year.
Oh, Lata, I don't track HDFC Life. I'm so sorry.
All right.
Yeah, okay.
Never mind. Have a great trading day, Sudarshan. Thank you for being with us. Mitesh, what's your 9:10 call?
I'll go with the buy on National Aluminum. Keep a stop at 79 here. Look for targets of 85.
Okay, well, the pre-opening rates have settled a tad bit higher, up almost about 60 odd points. So looks like it's going to be a good opening. A lot of stocks, NTPC, Bharti Airtel, Cipla, Asian Paints are all in the green right now, while Bajaj Finance actually down post its business update, down about 1.5%. But Nimesh is here to give us the standout brokerage report of the day. Nimesh, what do you have?
Hi, Sonia. So today's standout is on consumer electricals. BofA Securities has upgraded both Voltas and Havells to buy from outperform. On Voltas, they've raised the target price to 889, and on Havells, they've raised the target price to 1290. Now, the margin pressures for the entire sector is well known, is what BofA says, and that's reflective in the valuations as well. The valuations have corrected 38% from the peak, and Y2D, the sector is down almost 26%, despite the fact that the volumes have seen a bit of a volume growth has been sustained. So, in fact, the near-term catalyst is likely to be an El Nino effect, which is very high likely according to them, and which means a harsher summer, and that's why the demand can pick up. So, they expect the sector to outperform in 2023 and the demand momentum to sustain, largely on back of three reasons. One, harsh summer, two, real estate and capex upcycle, and three, increased financing. So, for they expect for the sector the margins to bottom out in Q3, and hence upgrade on both Voltas and Havells to buy from underperform, and they've raised a target price as well on both the stocks.
Okay, we'll keep an eye out on both those two names then.
It's okay, that may be an upgrade, but what do they mean by saying a harsher summer? We hardly had a winter. This is bloody unfair. I'm not thrilled by the consumer durable stocks doing well.
Okay, all right, let's move on. Vivek is back with us to tell us about Adani Ports update. Vivek?
Well, that's right. An operational update coming in from Adani Ports. To reiterate, the key numbers to keep an eye out for. The company handled 25.1 million metric tons of total cargo in December 2022. The container volumes were up 8% on a year-on-year basis. April to December 2022, the volumes have gone up by almost 8% on a year-on-year basis. Now, what is interesting is that Morgan Stanley has written a note. While they have an overweight with the stance on the stock with the target price of close to 1,030 rupees, what they are saying is that the cargo growth is down 13% sequentially for Adani Ports in the third quarter, and they're saying that there is now a downside risk to the company's stated guidance of 350 to 360 million metric tons for FY23. So what they're saying, to now reach the lower end of the guidance, the company will have to show an implied ask rate which almost of 24% growth for Q4 on a year-on-year basis, which at this point of time appears challenging given the softness seen in the cargo volumes.
Okay, thanks a lot for that. That's on Adani Ports. Abhishek is with us to talk about RBL Bank. Abhishek, how did it look?
Well, the business update, Sonia, of RBL Bank is one of the best that you are seeing in 3-4 years with respect to loan growth, and the CASA ratio or the low-cost deposit ratio is at all-time high. So deposit growth YOY of 11% is perhaps the best in 5 quarters, and the sequential loan growth or sequential deposit growth of 3% is perhaps the best in 3 quarters. The loan growth of 14% YOY is the best in 12 quarters, and the 5.8% growth that you are seeing on a sequential basis is perhaps the best in last 15 quarters. The CD ratio or the credit deposit ratio has improved, which suggests in a rising interest rate scenario there could be uptick in the net interest margin. The CASA ratio or the low cost deposit ratio now, unlike peers who have reported data wherein the decline is seen, over here the CASA ratio has jumped and is at all-time high of 36.6%. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, we've got pre-open rates that are in, and you know, Sonia and Lata, we were saying earlier today that the FIs, they've gone all in on the short side, which may not be such a bad thing. The gap up is around 60 points odd. My guess is that, you know, don't chase the gap up, you'll get an intraday dip, and that could provide a better entry opportunity. So just keep that in mind. Yesterday, we ended at the low point of the day, so we are undoing some of the weakness that we saw in the final hour of trade. That 18,000 odd mark should hold out, 17,950 to 18,000. If that does hold out, given the kind of positioning, we could see a bit of a relief rally from here on. Just want to make that point on the index.
Yeah, actually, it could be even much more than a relief rally, considering that you said that the market is sitting so short, the FI is sitting short. So at some point, there can be panic short covering. Let's see how things pan out. Mitesh, that question to you later. I just wanted quickly your view on RBL Bank. Have you looked at that chart?
I have, Lata. It's been buzzing. It's been showing a very strong uptrend for many weeks now. And I think the long-term trend has also reversed. Rallied from 75 to 175. I think now I would want to buy it and pull back around 155, 160 zone. You will get it. And then I think I'm looking at a target of 240 in a positional sense.
Okay, well, thanks for that. We're just waiting for the markets to open. Looks like it's going to be a decent opening after what was quite a weak showing yesterday. 18,100 is what the SGX Nifty is suggesting. Whether we get past that, only time will tell. Couple of stocks that do deserve mention, though. Keep an eye out on what's happening with the metal names. It's been very volatile last few days. This morning, the indications are that the start will be in the green, but it's been one up day, one down day. JSW Steel, Tata Steel, etc. So just be a bit cautious over there. And telecom looks like it's set to gain up almost about 1.5%. That's the first tick on the index. It looks decent at the moment. 18,000 is holding for now, up about 50 odd points. The start is in the green on the mid-cap end as well, up about 117 odd points. And it's a good market breadth. Now, whether this sustains, we'll have to wait and watch. But for now, the opening is in the green. As I mentioned, a lot of stocks. Bharti Airtel is your big gainer, up about 1 odd %. You have Sun Pharma, ITC, HDFC Life. Life insurance has been doing well. Reliance, Cipla, SBI. In fact, banks are also picking up pace. The Bank Nifty is now up over 100 points. IndusInd Bank is your big mover, up about half odd %. Axis Bank has been hitting life highs as well. SBI, Kotak are all in the green, and HDFC Bank is providing some comfort to the bulls as well. The pharmaceutical space, Sun Pharma, Cipla, are the big gainers as well on the index. On the downside, look at Bajaj Finance, 6% lower now on Bajaj Finance post the business update. As Abhishek was also telling us, the pace of growth has slowed down. And of course, there is a bit of trepidation that you are seeing across this pocket. Bajaj FinServ is also down 1.5%. But that's a steep slide that you're seeing in Bajaj Finance early this morning. Apart from that, Eicher Motors, SBI Life, Divi's Lab and Maruti Suzuki are a couple of other stocks that are in the red right now. ONGC is also trending a bit lower. The market is losing its early morning sheen, so there is a bit of caution in the system. As we were telling you earlier, the broader markets as well, just cooling off a tad bit, just flitting between the red and the green line. But there are plenty of stocks to look at in the broader markets.
Well, that's right, Sonia. You know, just keep an eye on the index. We almost moved into the red, in fact, so that you know, sell off from the day's high. That's precisely what's happened. Focusing on a couple of names: RBL Bank, healthy loan growth, deposit growth, CASA ratio at all-time high. That's opened up with a gain of close to around 2%. Mahindra Financial, the RBI has lifted the restrictions on recovery via outsourcing. So that as well has opened up in the green. It saw a bit of a correction in the last few days. That's bounced back. IRB Infra, the board has approved a stock split. We were anticipating that. So The street has read that positively as well. Marico, the business update has come about, but I think the stock is more or less flattish, not reacting big time out there. Godrej Properties, they've sold close to around 1 million square feet, worth around 430 crores in the Ahmedabad project since its October launch. That opened up with a gain of close to around 1.5%. Godrej Properties, not Godfrey Phillips, so let's get that up. Pune Villa Finance as well, the disbursements are up. AUM as well is up. So keep an eye on that one. And BF Investments. Yesterday we were updating you that they were likely to consider delisting. Now they have withdrawn that. It's not likely to happen because one of the promoters, had sold shares in the last 6 months or so. I think the management should have been more responsible before announcing that they're going to be taking up this offer, because the stock is up 50% in 3 sessions. Suddenly you see that one of the promoters, they have breached that insider trading law, or, the law that is required for them to go ahead and do this delisting offer. For the time being, the stock is locked down 10%, and there are plenty of sell orders as well on that counter. So keep an eye out on that. Lata, what else?
Thanks a lot for that. Actually, Bajaj Finance, I think, is the key point in the market today.
Yes.
The market disappointed that the loan growth has not been fast enough.
Yes.
Their new customer acquisition is excellent, but the quantum of low growth is about the lowest. The pace is the slowest we have seen in many quarters. And I think the market is disappointed.
Macquarie has put out a note where they say that the quarter-on-quarter AUM growth for Bajaj Finance is the lowest in 10 years. 10 years. Oh, so, the growth, although on a year-on-year basis, it's 27%, but it is below their estimates. And, it's the moderation in loan growth is something that is lowest in 10 years, and it's expected to moderate even further. So I guess that's where the concern stems from.
Absolutely. And the other standout performer on the green side is RBL Bank. Well, nothing up and away, but still it's about a 2% gain when I last saw 1.5%. Okay, so now moving to 2%. So that again, I think was a pleasing set of numbers after the long broken pace they went through just a year ago. So keep other stocks also on your radar while we invite our market master for the morning. Tahir Basha, the Chief Investment Officer, Equities at Invesco Mutual Fund, joins us. Tahir, good morning. Thank you very much for joining us. Very happy New Year to you. What do you... Thank you. What's your take on markets itself? Last year, 4% gain, but still we were patting our backs that we outperformed everyone else. Is it going to be more of the same this year, tepid performance, but still better than others? Or can we be surprised?
Well, as things stand today, I think, Lata, it looks like it's going to be probably almost, at least in terms of quantum of returns from the current level of the markets, is going to be somewhat similar to what we have seen in 2022. So I don't really see much of a difference in 2023 compared to 22. Maybe we might probably, we might also risk certain amount of underperformance compared to the strong outperformance that we probably had in 2022. So, it's looking like a market where probably, ability to probably enhance returns from single digit to probably a little higher is only possible if we were to probably buy this market at dips. So that's what it probably looks to me like, at least as far as we can see, based on most of the factors which are visible to us for 2023.
Okay, Tahir, hi, good morning. The big talking point right now is Bajaj Finance and the kind of 5% slump it's seeing post reporting a 27% growth in the AUM year on year. But of course, the pace of growth has slowed down. Would that be a concern for you? And as a long-term investor, what does one do now?
So I would rather avoid stock-specific questions, but by and large it is, I've not looked at all the details, but by and large it is reflective of a little bit of a slowdown as far as urban discretionary also is concerned, and in general consumption is concerned. I mean, I think that is the impulses that we had probably in 2022 and maybe even 21 as we were getting into the recovery mode post-COVID is now more or less behind us, and we are now onto more normalized growth rates in many things. So I think some part of it is probably reflective of that. Maybe this is an area which is also becoming incrementally competitive too. So I think that probably seems to have been playing out, might be playing out across the industry as well.
All right.
Just to continue that theme, Nigel, I'm really sorry.
No worries.
There were others also who told us this pent-up demand has now become spent demand. So is that a theme that you will chase, that the urban consumer discretionary spending, which was so good in 2022, is over and done with? will that guide your stock picking of discretionaries like maybe autos, realty, etc.?
Yes, it is. I mean, we are cognizant of the fact that this is clearly there are tangible signs of slowdown and increased competitive activity, and many of the stocks within the sector, or in fact, probably the whole of the consumer discretionary space, a bulk of it is actually right now premised on the margin recovery story for 2023, and that also does not. I mean, we don't really want to take it on face value because we don't really have a great handle in terms of where commodity prices are going to be headed in 2023. And even if it were to probably relent a little bit for the benefit of these companies, they might have to probably expend it in a slowing demand environment and to match up with competition. So I think it's not a very clear-cut picture as far as consumption is concerned. Much of it is, as of now, being predicated on a possible rural recovery. And so if let's see if the baton passes on from the urban consumer to the rural consumer, but even there, many other factors are still more, probable rather than possible.
Okay. All right. Hi, Tahir. Good morning. Tahir, what about the insurance space? We briefly spoke about it the last time we chatted a couple of months ago. It's been a bit of an underperform, actually. The sector on the whole, though it's underpenetrated. Then the last couple of weeks, there is some traction that's coming about. Case in point being an HDFC Life. I mean, it's not done much. Maybe one of the stocks that are still trading at pre-COVID levels on a valuation parameter. Your sense on the space?
So I believe we are looking at this sector probably is starting to get some bit of excitement on the back of possible avenue of savings once again, and that coming into play. And I think there's also a sector, as you rightly said, which is underperformed. Many of the stocks in this sector have trended down as far as the valuations are concerned, so relatively better, and we've seen them somewhat underperform even compared to the other to the general banking space. So I think that's probably starting to see some kind of that's probably leading to some kind of attraction as far as this sector is concerned.
Okay, I wanted your thoughts on what's happening with the auto sector, because it's very sort of diverse, the moves that we are seeing here. And it's not even conclusive. I mean, pockets like two-wheelers have seen no recovery at all. In the cars space also, it's just the premium segment that's doing well. Commercial vehicles are recovering, but in pockets. So what do you do here? Do you avoid this space entirely? Do you find some areas? Do you like EVs, auto ancillaries?
So you're right. It's we were expecting a leg of improvement in the sector at the beginning of calendar year 22, and good part of it has actually played out either in terms of the demand environment getting somewhat better, especially in things like passenger cars and commercial vehicles, and also accompanied by some easing in oil prices and commodity prices in general, which also came to their rescue. But it's now not easy low-hanging fruit anymore, and like as I said, discretionary consumption is not entirely looking as robust. So we have to be a little more careful here. There are some pockets that we like, especially things like commercial vehicles, maybe tractors, agri-machinery, parts of passenger vehicles as well, especially in companies where we are a little more, comfortable as far as market share gains are concerned. So some of these pockets are still relevant, but obviously, it's now a lot more bottom-up, and it's a lot more stock-specific than probably what it was at same time last year.
Okay. Well, let me ask you a blank check kind of question. Where will alpha come from?
Well, that's something that we've also been kind of, scratching our heads with, and, it's not the way we were probably thinking of things at the same time last year. There were still very clear, drivers of alpha and drivers of or pockets, at least, where we could probably see alpha generation. Much of it is kind of played out in 22, and some of the incremental impulses required for alpha generation in 23 are, as of now, not fully visible. So I would say maybe banking, financials is some area which is on its way to discovery. I mean, it's not as low-hanging a fruit as what it was probably last year. But that's one, and you probably might, start looking at some parts of global, sectors purely from a valuation perspective and purely from a view standpoint, such as things like technology or maybe even commodities for that matter.
Oh, okay. But in banking and finance, of course, you said it with some hesitation and with some prefacing. Would you go down the chain in or down the line in banking and finance? After all, the private sector banks have been well discovered. So does it make sense to go private sector, public sector banks, lower down the public sector banks, old private sector banks, any of them?
We've done that as well, and I think the market too has done that, and it's reflected in the fact that the PSU banks, for example, have, and maybe even some of the mid-sized private sector banks have done pretty well, particularly in the last 6 months. So I think that too is not therefore now a space which is entirely undiscovered, Lata. I mean, that's exactly what I said, that it therefore constrains the ability to kind of find fresh pockets from which alpha can be generated, especially if domestic growth impulses and factors for growth are not fully visible, at least as far as incremental growth is concerned.
Okay, all right. Tahir, what about some of these new age companies? Some of them, the operational matrix has gradually started improving. Not just that, the intent from the promoter entities also, the managements have been fairly positive from a stock market perspective. They're talking about the path towards profitability. Last time you said, you're having a look at it. Anything you like from that space?
So we have a few exposures, across some of these, new gen businesses or those which have listed in the course of the last 12, 18 months. And you're right, I mentioned this the last time as well, that, some of these are at least, obviously valuations have corrected. They still look high optically, but clearly they are significantly off their peaks. And as you rightly mentioned, that in some places we are starting to see operational metrics improve, and probably the path to profitability becoming a little more visible, a little more nearer rather than what it was earlier. So I think it gives some confidence. So we are basically looking at companies where we think balance sheets can support growth. A fact that they have a reasonably large TAM, and if at all they are companies which can continue to maintain leadership characteristics or their competitive market advantage that they started off with, at least for the next foreseeable future, then I think those are some of pockets that we have preferred in this space.
Okay, all right. We will leave it at that. Tahir, thanks a lot for joining in, and have a great 2023. Hope we'll get to chat through the course of the year, and thank you for being with us as a guest today.
Okay. Now we come to the big announcement that came yesterday. The cabinet announced, or rather approved, the government's national green hydrogen mission with an initial outlay of around 19,700 crore rupees. The mission targets investments worth 8 trillion rupees and hydrogen production capacity of 7 million metric tons by 2030. To understand what this could mean for one key player in this space, we are joined by Mr. Mohit Bhargava, the Chief Executive Officer, CEO at NTPC Renewable Energy. Mr. Bhargava, good morning and thank you very much indeed for joining us. A very happy new year to you. We had news earlier this week that HPCL and NTPC Green Energy have signed an MOU. So, what are your plans behind this? Are you going the PLI way? Are you expecting something from this big announcement from the government?
Yeah, good morning and thank you for having me here. Happy New Year to you all.
Thank you.
Yes, yesterday was a great day when we had this announcement by the government, and hats off that finally we have in place the National Green Hydrogen Mission. In fact, the industry was quite keenly waiting this announcement, and we hope that the framework which has been announced will actually help now kickstart the green hydrogen economy in the country. While most of the players have been involved and working on their plans, so we also have started a few pilots. In fact, I'm happy to share that just 2 days ago, we actually started operations in our first green hydrogen pilot, where we are blending green hydrogen in the natural gas pipeline for supplying to the households at one of our power stations in Gujarat. So these are the pilots we are already working on, but with this big bank announcement in place, with almost 19,000 crores or close to 20,000 crores of incentives and the expected investment of almost 8 lakh crores. So we expect that green hydrogen economy
will move forward. India will actually develop in terms of being the manufacturing base for domestic as well as export. We also expect that this incentive of close to 20,000 crores, a big chunk of which we expect will be used for green hydrogen production or helping keep the cost of green hydrogen low, will help us help the industry, local industry and hard-to-abate sectors to come in.
Okay, all right.
Yeah, on the other HPCL, on the HPCL MOU, do I?
Just a minute, sir. Did you say that you are actually supplying energy already from your green hydrogen plant? Is that what you said earlier in Gujarat?
I'm saying that we started blending green hydrogen in the natural gas pipeline 2 days ago in Gujarat. It's a small project. We are supplying that blended hydrogen into the households in Gujarat now.
Okay, all right. So, talking about this, CLSA, they believe that NTPC is going to be a key play on India's entry into the global green hydrogen market. Can you secure around 15% share of the global green hydrogen market to reach around 760,000 kgs by 2032? That's an assumption that CLSA has made in a note that they are talking about, and it's important from a stock market perspective. It could add nearly around 14, 15 rupees to your share price. So I ask you this, 15% market share, do you think it's gettable?
I would not be commenting on what the market speculation is, but yes, we have plans to do 60,000 megawatts or 60 gigawatts of renewable capacity by 2032, and we expect that maybe 5 gigawatts out of that or more, depending on how we're able to get the consumers, will be dedicated for green hydrogen. So we expect that we'll be having a significant share of the green hydrogen market, domestically at least to begin with, and also internationally as we are able to tie up deals.
Okay, so you're saying 60 gigawatts by 2032 is the target that stands as of now. Out of that, 5 gigawatts will be particularly for green hydrogen. Yeah. Can you tell us, to reach the 60 gigawatt target, will a large part of it be organic? Are you looking at the inorganic route as well? And within green hydrogen too, to reach this 5 gigawatt target, what is the plan?
So 60 gigawatt will be mostly organic, because right now we are quite focused on developing our projects, and we already have, if I can share with you, we already have 3 gigawatts of operational capacity, and we have close to 5 gigawatts which is under construction, and another 7 gigawatts on which we'll start work soon. So that's about 15 gigawatts which is already in the pipeline. We have also tied up for land with the government of Gujarat, with the government of Rajasthan, Maharashtra, and we are also in the process of identifying more land. So the overall target is to go organic right now, but of course it doesn't mean that if there's a good deal or some other option, we'll not be looking at it, but right now it's organic. Green hydrogen would be also, for example, we already started work on a DPR for setting up a large ammonia plant in Gujarat, where we have got land from the government of Gujarat. So that work's underway. Once we have that DPR ready, we'll be able to move forward in terms of how we can implement that project. So that's the plan right now. A lot of hydrogen consumption, we believe, would be happening through the mandate, which will be part of this mission document, which will enable hard-to-abate sectors like refineries and fertilizers to come on board for consuming hydrogen or ammonia.
So
can you give a timetable for this? For what Sonia just asked you, for that 60,000, what's the timetable? Say, what will we expect by March 2024? What may be up and running by March 2025?
So by March 25, we are looking to do about 12 to 15 gigawatts, which will be operational, and then we will kick up pace and we'll be doing 60 by 2032. Intermediate targets, it's probably too academic right now, but we are in the process of taking up more projects, and our growth trajectory will not only depend on the tariff-based bids, we'll also be looking at C&I customers, which is what HPCL is a part of, that we tie up industrial customers, large industrial customers. So we already have the deal with Indian Oil. We did this yesterday with HPCL. So we're looking at that space. We're also looking at the merchant space in terms of selling power on the exchange or on a short-term basis to people who are willing to buy. So we are looking at all these spaces in terms of expanding capacity.
So this 12 to 15 gigawatts that will be operational by March of 2025, you said, and you're also setting up a large ammonia plant in Gujarat. Have you secured all the capex for it? I mean, you have about 20,000 crores per annum that you've outlined, but will a large part of that be towards clean and renewable energy? If yes, how much? And would you have to tap the markets?
So if you're looking at only the green space, the 20,000 crore which you're mentioning, I believe, is NTPC's total capex. But going forward, yes, we intend to spend, I mean, roughly we're looking at about $5 billion capex by 2025. But of course, that is incumbent upon one of the headwinds we are facing right now is in terms of module supply, which we hope to ease gradually as things become better this year. So once all these inputs and raw materials are in place, we should be able to move forward quickly.
All right, Mr. Bhargava, you know, the renewable energy dilution stake sale that we're talking about, that has been getting pushed. Earlier, the deadline was late 2022. That was pushed to early 2023. What's the update on that front? Point number one, if you could give us a timeline by when the stake sale will happen. Point number two, how much will you dilute? And some of your peers have done it at around 10 times EV upon EBITDA. Is that a fair assumption? 3 points, sir.
Okay, so yes, timeline was pushed slightly because the people who were involved in the due diligence have, I would say, taken some extra time, and we also needed some time in getting the clearances from the respective states. So that's more or less done. In fact, what has happened in between that, a couple of other people have also evinced interest in joining, so we have also given them clearance to go ahead. Timeline, we are now looking at a February end kind of timeline or early March. We definitely have to do these transactions, complete this transaction by the end of March. That's our internal deadline. In fact, the new people who have also come in, we have told them very clearly that we'll not be able to give you more timeline, and you have to do all your study and prepare your documents and all within this timeline. Stake sale, what we're looking at is up to 20%, but of course we need to keep in mind that the valuation is something, you mentioned a number of 10 times. Yes. We definitely hope to get a better number. I cannot hazard a guess of what it will be, but definitely we'll be looking at a better,
Mr. Bhargava, multiple. You're making some important points. Yeah, you're making a couple of important points out here. You're saying that the deadline should be in this fiscal itself, so we'll wait by. And 20% is what you're going to look to dilute. So two-part question. One is, will you dilute the entire 20% at one go, or is it going to be on a part-by-part basis? And if it's not 10 times EV per EBITDA, then what are you looking at?
No, the multiple question is something which will happen in due course. I mean, we still have to understand how the people are reacting. We have got very good response from quite a few people. We hope to get a good valuation. All I'm trying to say is it's probably difficult to hazard a guess right now, but yes, you did mention a 10 multiple 10x kind of thing which happened recently. So we should be getting close to that or better than that. That's our expectation. The other part is that it's an up to 20% dilution. So we are not saying it will be total 20%. If we get a valuation which is like hopefully better at 10%, we might do 10. And the important thing is we are not looking at only one guy. If one guy gives us the entire stake valuation, the best valuation offer, we go with them. Otherwise, we could do it in more than one. It could be more than one entity also who will be given the stake, depending on whoever gives us the best offer.
When you say this year, you mean FY23 or you mean calendar 2023?
No. This year means March 23.
Okay. That's important, sir. That's important, sir. And just finally, you know, this is slightly long, medium term. When do you expect the first quantum of exports of green hydrogen from India? From you, for that matter.
India, I believe, honestly, we don't have any immediate deal on the table right now. We are discussing with a few guys. But I understand a couple of other industries have been in a position, but I don't expect those, that ammonia or hydrogen to start flowing before the next 3 to 4 years, because there's a lot of work to be done.
Okay.
I'm sure you would have read the announcement that behind the ammonia or a hydrogen plant, there's a huge amount of work required to do on the renewable side, because that is the major capex on that side. So it takes its own time. So I don't expect anything to shipped out before 3 to 4 years.
Got it, sir. Thank you very much, Mr. Bhargav. It was a pleasure speaking with you. I do hope you and everyone at NTPC Renewable have a fabulous 2023.
Thank you so much.
Okay, well, we have to take a quick break, and thereafter another very interesting conversation is lined up. Vinod Agarwal of Eicher Motors and Jay Kale of Elara Capital are going to join us to discuss the key auto sector trends, the demand trends, very strong in the CV space. Thereafter, we will also connect with Sandeep Sangwan of Castrol India. The company recently acquired 7% stake in KI Mobility. So we'll discuss that as well.